Welcome to The Explainer. So today we are unpacking one of the most talked about and honestly heavily debated topics in the decentralized finance space right now, Ondo Finance. Look, there has been a massive amount of buzz lately and frankly a whole lot of confusion surrounding the ONDO token. We've seen explosive price action over the last week, but at the same time we've got this lingering, really intense debate about its underlying fundamentals and long-term value. So what we're going to do today is put the noise aside. We are going to look strictly at the data, the source material, and the actual mechanics of what is happening behind the scenes to separate the hype from the reality.
Okay, let's dive into this. Here is our roadmap for today. We'll start with Section 1, the 30% price pump. Then, Section 2 covers the RWA structural shift. Section 3 uncovers the tokenomics and supply risks. Section 4 explores this massive upcoming fee switch catalyst. And finally, Section 5 maps out future price scenarios.
Kicking things off with Section 1, the 30% price pump, where institutional money moves in.
Now, if you've been glued to the charts like I have, you know exactly what I'm talking about here. The ONDO token has surged over 30% in just a single week. And alongside that massive price spike, trading volume climbed a staggering 41%. Now, I want to be clear, this wasn't just some random retail plump. This was a highly calculated market reaction to a very real, major institutional milestone.
Back on May 6, 2026, Mastercard released a statement confirming a true landmark transaction alongside Ondo Finance, J.P. Morgan's Kinexys, and Ripple. Basically, what they did was complete a pilot program that successfully redeemed tokenized U.S. Treasuries, and they used Ripple's USD stablecoin to settle those payments almost instantly. What you really need to take away from this is simple. It proves that blockchain infrastructure isn't just some theoretical experiment anymore. It can absolutely handle live, global, cross-border interbank settlements. And Ondo? Well, they are sitting right at the center of the whole shebang.
Moving right along to Section 2, the RWA structural shift, and what we're calling charting the paradox. Because there's a massive, kind of wild paradox playing out right now. On one hand, Ondo's protocol growth is just staggering. By Q1 of 2026, they reached a total value locked, or TVL, of $3.015 billion. That is billion with a B. And they generated $13.26 million in revenue. They're completely dominating the tokenized treasury and equity space. But despite this record-breaking growth, the Ondo token is currently trading roughly 90% below its all-time high of $2.15. The fundamental protocol has literally never been larger, yet the token price has been heavily suppressed.
And this brilliantly illustrates the technical side of the story. Analysts looking at the weekly chart have noted a classic Wyckoff accumulation phase forming deep in a drawdown zone, specifically between 19 and 24 cents. Now, this is typically a quiet, steady accumulation period, where smart money positions itself. The absolutely critical invalidation level sits right at 17 cents. If it drops below that, well, the bullish setup completely fails. But if it holds, analysts are targeting the 38.2% Fibonacci support level right around 87 cents for the next macro cycle. Which brings us to Section 3, tokenomics and supply risks, the hidden weight. So, to truly understand why a token with $3 billion in TVL is struggling to break out, we've got to look at the math. Out of Ondo's 10 billion maximum token supply, only about 53% is currently circulating out in the wild. That leaves a massive 47% locked up. This right here is the hidden weight. Remember back in January 2026? There was a mega unlock of 1.94 billion tokens. When that many tokens suddenly enter the market from early investors and treasury allocations, it creates a persistent mechanical headwind. The market essentially has to absorb all of that new supply, which naturally just pushes the price down, even when the fundamental news is incredibly bullish.
And that brings us to a really crucial metric, FDV, or fully diluted valuation. Because only half the tokens are circulating, ONDO's circulating market cap sits right around $1.24 billion. But if you calculate the FDV, meaning what the valuation would be if all 10 billion tokens were unlocked today, it's actually closer to $2.5 billion. Think about that. For the token to surge back to its all-time highs, the market doesn't just have to buy the current tokens, it has to be willing to absorb billions of dollars of heavy, future sell pressure as those remaining tokens vest. That is quite the bag to hold if you aren't prepared for it.
All right, moving to Section 4, the fee switch catalyst, changing the game. Before we go any further, I want to pause and just ask a really crucial question. What does the Ondo token actually do right now? Like, if you buy it today, what exactly do you get?
Well, you might be surprised to learn that currently ONDO is purely a governance token. It grants you the right to vote on the DAO's proposals. But, and this is a massive but, it currently has absolutely zero direct cash flow rights. Zero. All those millions of dollars in management fees generated by that $3 billion TVL, yeah, those go to Ondo Finance Inc., the corporate entity, not to the token holders. So right now, holding the token basically just lets you cast a vote.
So, the crucial point is, this could change the game entirely. We are looking at the H2 2026 fee switch vote. The Ondo DAO is scheduled to vote on whether to activate a mechanism that would finally route protocol revenue, which, by the way, is estimated at $48 million or more annually, directly to token holders or use it for programmatic token buybacks. If this passes, it's a real game changer. Ondo transforms overnight from a profitless governance token into a yield-bearing asset with real, organic, fundamental demand.
And honestly, the fee switch isn't the only tailwind here. The foundational hurdles are largely being cleared out of the way. In late 2025, the SEC officially closed its investigation into Ordigo without charges. They've also secured EU passporting rights, which opens up 30 different European markets. Then, in February 2026, 21 shares actually filed for a spot Ordigo ETF. Think about that. It would open the floodgates to traditional institutional capital. Oh, and major players like Franklin Templeton are directly integrating their ETFs onto Ordigo's infrastructure. The runway is seriously being cleared.
Finally, we hit Section 5, Future Price Scenarios. Where do we go from here?
So what does this all mean for the price? Well, based on the data and all these catalysts, analysts have mapped out 3 objective scenarios for the end of 2026. Let's start with the bull case, which places ONDO between $1.80 and $3.10. Now, this requires a perfect storm. The DAO successfully passes the fee switch, and the SEC approves the spot ETF. That would flood the token with both organic yield demand and massive institutional volume. Then we have the base case, sitting between $0.85 and $1.20. In this scenario, the fee switch passes, which gives the token fundamental value, but the ETF maybe gets delayed by regulators. The token still recovers nicely as the market finally absorbs that lingering January unlock pressure. And of course, we have to look at the bear case, placing the token between 20 cents and 45 cents. This happens if the fee switch vote fails, maybe due to regulatory fears from the DAO itself, and that heavy token unlock pressure just continues to weigh down the market without any new demand drivers to offset it.
Which leaves us with the ultimate multi-billion-dollar question, right? The protocol is undeniably a leader in bringing real-world assets onto the blockchain. The TVL is there, the institutions are there. But if institutional DeFi merges fully with traditional capital markets, will Ondo's governance holders finally vote to capture the value they've built through the fee switch? Or will regulatory fears keep it a profitless token, completely disconnected from its own massive success? The market is literally waiting for the answer. Thanks so much for joining me for this explainer, and I really hope this helped you separate the hype from the reality. See you next time.